Imagine investing in a platform for 30 years. Now your hair is white and you are ready for retirement and your financial independence plan is on point. You want to cash out your multi-million dollar worth of stocks and only realize that 40% of it is gone. Yep, the platform you invested in when you were 20 years old has some fees that you weren't aware of because you didn't watch this video. In this video, I will share with you the best platform to invest in and hopefully avoid all these fees before it's too late. First, we will talk about what fees you need to consider. Are you ready? Let's start. The first fees that you need to consider is trade commission. Let's say you sold an apple for $3 through a middleman who went to the farmer's market and sold it there. The middleman will take from you $1 out of the profit that you just made and you will be left out with $2. That is exactly what trade commission is. When you make a profit of 10 shares of Apple stock and now you decide to sell them, the platform you use might charge you a percentage of that transaction. I will guide you at the end of the video on how to avoid all that. The second fees that you need to be aware of is expense ratio. This only applies if you plan to invest in mutual funds, index funds, or ETFs. Imagine hiring someone to take care of your portfolio, like buy and sell stocks for you and hopefully make you some profits. Probably, this guy will charge you a service fees. This is what is meant by expense ratio. When buying ETFs or mutual funds, you are probably hiring someone to buy you stocks. This company you hired will charge you annual fees as a percentage of the investment they are managing. Number 3 is mutual fund transaction fee. This only applies when you buy or sell some mutual funds. Number 4 is 401k fee. It's an administrative fee to maintain your 401k plan. If you think that these fees are small and will not affect your portfolio, then let me show you how significant it can get once it adds up over time. Let's say you invest $500 every month for 30 years, which equals a total of $180,000. Over these 30 years, your average annual return is 7%. Now let's look at this table. If the annual investment fees is 0%, you're not charged anything, then you have a total of $588,000 after 30 years of investing $500 every month. If the annual investment fees increased, let's say it is 0.25%, then you should have $561,000 after 30 years. You just lost $26,500. If the annual investment fees increased to 1%, then you should have a total of $489,000 after 30 years. You lost $98,500. If the annual investment fees is 2%, look at this now, then you should have $409,000 after 30 years. Congratulations, you just lost $178,000. That is almost equal the amount of $180,000 you invested over a period of 30 years. You see how significant a small investment fees percentage when it accumulates over a long period of time? That is just insane. Don't worry about all that. At the end of the video, I will help you find the best brokers with zero fees. Also, I will show you a website that can compare brokers. But we are still not done with fees. There are annual fees that the broker might charge you yearly just for having an account with them. Or even eventually when you decide to close the account, they might charge you some fees. There are tons of good brokers that doesn't charge anything. Also, if you do not trade for a month or more, there are some brokers that will charge you a fees that is called inactivity fees. Again, there are many brokers that does not charge you anything. Now let's talk about the part that you came for. How to choose the best broker with the lowest fees. By the way, this video is not sponsored by anything. And from here you can compare multiple of brokers at once. And here you can sort them by the overall score or the popularity or the minimum deposit, withdrawal fees, and US stock fees. For example, over here I chose the overall score. And then also you can filter whatever, let's say you want to invest in stocks, then you click on stocks, right? You want to invest in ETFs, you click on ETFs. Like, let me unclick all these. Okay, so stocks, ETFs, maybe crypto, you invest in crypto. Once you click on all of these, and here you can see the fees. You want something with low trading fees, you just click on that. Zero commission, you click on that, and then it will filter all the brokers that you want. And as you can see here, it shows the overall score, the popularity, and is it available in the US or not, and when was it updated. Like, for example, this one, as of we are recording right now, it is as of February 12th, so this is up to date. It's updated February 2024. And here it shows the best brokers in the US. Over here, like if you scroll down, you can see the fees score, and like based on that, like for example, Interactive Broker has 4.3 out of 5, eToro has 4 out of 5, and then Fidelity has 3.5 out of 5, and so on. And then here you can see the US stock fees. Like for example, these are the stock fees that we just talked about when you buy or sell. Here it says that the estimated commission for $2,000 trade, assuming a $50 US per stock. And that's how much they're going to charge you. For example, Interactive Broker is going to charge you $1 for every $2,000 you trade, assuming that $50 is the price of the stock. Okay, and so on. And then here we have like the withdrawal fees is 0 for those are the best ones, like it has 0, and then the deposit fees is 0, and so on. And here's the safety, like you want to make sure that this broker will not go bankrupt and then like maybe you lose all your money or something. These are the safety levels. Those are the ones that they are really safe. And but I'm not a financial advisor, you gotta do your research, but here they are certified by these regulators. And then this is the foundation dates. They've been in the market since 1977, Interactive Broker, eToro 2007, and so on. And investor protection, yes, they do have protection, but up to like for example over here, investor is protected up to 500k or something like that, and then each one has some details. You got to read that. And then here is the minimum. Do they have minimum deposit? Because some brokers you have to have some minimum deposit, so to open an account. Most of them 0, except eToro has $50 for example, and then bank transfer deposit, and so on. And here's the platform experience. For example, one of them has the mobile platform score. Is it like user friendly or not? And based on that, it can give you a score. And then if you want to read more about the broker, you see the reviews. For example, let's see now the Interactive Broker. Here are the pros and cons. Okay, and then if you scroll down, you can see the inactivity fee that I just explained and the withdrawal fees that I just explained. So here it does not have inactivity fee, and it does not have withdrawal fee and minimum deposit. And US stock fee, it is fixed price. It's $0.005 per share. That is like really low amount, which is really good. And time to open account, it's really short, and like so on. Here it has, and here it talks about the like more details about the fees. It's low trading fees. These are the pros, and free stock and ETF trading for US clients, low margin rates, and so on. And here are the cons as well. And then here, like if you want to read more about the details of the broker, here you can see it all. And this is, so basically this is the website that you can use as a guide on to show you what fees you will have, and so on. Now that you learned how to invest and which broker to use, it is very important to know when to invest, because entering the market is the most important decision you will ever make because it can dictate your portfolio performance in the next 10 years. I'm not the only one saying that. Also, Warren Buffett once said to be fearful when others are greedy and to be greedy only when others are fearful. I shared a video to teach you when is the best time to enter the market. You can watch this video right here, and don't forget to like if you learned something new and subscribe.